A lot of questions come in around here about charting. We're going to jump into some easy but repeatable patterns that you can look for in charts on a daily basis to improve your ability to find winning trades, some of which, guys, occur even before the market opens on a daily basis. So let's kick things off here and talk about some basic charting patterns that everyone can use.
Absolutely. We'll leave that one for the pre-market, I think, for Sean's going to hit you with a good one. And look, I actually wanted to talk about some of your more normal, like you'll read about charting patterns like, oh, your bull flags and your head and shoulders.
You can Google those.
But then I thought about something which maybe is a little bit more simple to look at. And I feel like is a higher percentage play for those people that are trying to hit bigger trades. And that was just look for, it's a gap fill. And I'm going to use the example of Lucid here on the daily chart just because first things first, if you're looking for a gap fill, you want something which is put in some parabolic moves and had big price swings. So you have Lucid last year, 22 all the way up to 62. But what stands out was this breakout here, which had support at about 27.50, broke this level 28.5, 29, and then was the first charge into a break to 62. But the key is its first pullback from that huge breakout was at $33. You then had a monster move up, continuation there, and then support at $33. But not small support. This is support for the entire month of December in front of 33. After it comes back almost 50%. You have a month's worth of support at 33. It even tries to bounce, goes almost 50% from there, and then retests 33. So when that level breaks, you've got a good $3 to $4 worth of room below it, where previously on the way up there was a liquidity vacuum, and it's about anticipating the trend is to the downside, support has been broken, and what you have is a potential wipeout trade. This is what happened the day that it broke it. At the open on Lucid. You could have had this, look, if you tried to fade the trade, fair enough, you get a bigger win. But when it took 33, it was within a half an hour, it was already down at 30. It tried to check up. It then touched all the way down to 29. It tried to check up again, ended up right at that 28.50 level, filling in the entire gap on the day. Maybe you don't always fill in the gap, but the potential for a bigger move is there because of that vacuum. Everybody sees that, and a lot of more stops are going to be at a level like that, which allows you to play that move. It works in both directions, but the key thing you have to look for is you want a strong price movement away from that price. You then want confirmation that the support in front of the gap is big, whether it's support or resistance, that there was legitimate support, and then finally you look for that break, and that allows you to hold that short. Like, you're not getting that short 33 to get out at 32. You're taking a short at 33 to get out at 30, to get out at 29, to hit a home run style trade. Maybe it doesn't come up as often, but you know what? When you see it, it's a little bit more obvious to spot those big gaps.
Okay, so yeah, great gap look. And then as Neil mentioned, why not just look at something as simple as the pre-market? I mean, you know, you got to sort of put on your trader hat and figure out what kind of style of trader you're going to be. And if you are going to be a scalper and scalping trades, this is the best opportunity here. Every single day when you find a name that you like, and let's just go over to AMD today. Obviously, it's more aggressive than the market. They were up in the pre-market. It was a good move today for AMD. They had the NVIDIA news there. So we knew AMD was going to try to go. The stock market, also the NASDAQ, was positive in the pre-market. So what we're looking for is, again, look at this level being formed. And I like kind of when it barcodes like this. You know, you have a bottom here of 122.50, and then these top levels, forget about the wicks. So that's the one thing I want to tell you is we don't have to worry about these wicks, because when you're looking at pre-market wicks, as long as there's no huge volume here, some of these spike ups are just dark prints and things like that that are just, they're not there to trick you, but they don't serve a great amount of purpose in my opinion. So anyways, that's what you're looking for. And what you're looking for is just a pre-market top. This day, it actually coincides with a nice level. I like to look for 50s, 25s, even 75s. So when you're at some quarters like that, right here, here's the pre-market high, 123.50. So here, the market opens up down here, we're low. We're still in this range. We don't know what to do. Bouncing back and forth, back and forth. But here's the break right here. And there it is, 123.50. Wait for that, it's right here. And then you get a big move up. Look at that move up. That's $1 straight, just in the same candle. It's actually 2 candles, but virtually the same minute, you go all the way back up a straight $1. So for me, that's a quick hitter. Those are the ones you're looking for, and then you can see what AMD eventually does, continues to go back up, but this is what you can get right off the open. You take these pre-market levels on stocks that you know are runners, and you just pound it, hit it, and quit it, in and out as fast as possible. There's a bunch of different examples we can show you, but I think this is a good one here for AMD today. The one I was gonna show you, actually, let me just hit my blotter here. For Peloton was another example that I thought was pretty decent. Here's the pre-market, again, basing down here at 28.50, and then the high right there, again, forget about these wicks, just happens to be at $30. So we take that, and then sure, goes against us 50 cents, that's fine. There's the dollar win, and then there's the cruise to the upside again. So you take some of these pre-market breaks on stock that you know are going to be in play, and hey, why not? You have your out, could be the pre-market bottom, which doesn't get hit, and then your outs for the upside, as we can see what happens at Peloton, it just continues to go. So that's, charting patterns that I like, quick hitters in the pre-market.
DWAC, another great example of that today, guys. It's not, and worth mentioning here, it's not just randomly finding a stock that's trading in the pre-market and going long above the high or short below the low. Find something that has a news catalyst and try and look for a move in that direction. Significant levels get put in the pre-market when there's an additional catalyst. There's a couple of very simple charting patterns that you can look for too every single day.